Hey there, I'm Michael Wolters with Keller Williams Real Estate. I help families along Sandy and in Sandy find their perfect suburban match and build long-term wealth through data-driven market analysis. And one of the most common situations that I run through is exactly this. You've built equity in your current home. You're ready to move up, but you don't want to sell first and end up scrambling to find a place to live. Or buy first and get stuck carrying two mortgages that you really can't afford. So this is coming up more in Sandy right now than almost anywhere else along the Wasatch Front because so many of my clients have built 10, 20, even 30 years of equity in their starter home, and they're finally ready to trade up. And here's the bind. If you sell first, you get certainty on your numbers, but now you're in temporary housing, scrambling to find your next place under pressure. If you buy first, you only move once, but now you're carrying two payments, two insurance bills, two tax bills until your old home closes. And right now in Salt Lake County, single-family homes are selling at 98 to 99% of asking price. As a buyer, you need your offer to look as clean and as competitive as possible. And contingent on the sale of your home is one of the weakest things you can put into an offer right now. To put it in real numbers, the median single-family home in Salt Lake County is sitting at around $650,000. And there are about 15,000 active listings across the entire Wasatch Front. That's not a lot of inventory for a lot of buyers, all trying to time the exact move. So let's talk about your three real options. Option one is the contingent offer, done the smart way. In Utah, when your offer is conditioned upon selling your current home, most sellers will only accept it with what's called a kick-out clause, using the option to keep the property on the market addendum. That means the seller keeps marketing their home while your contract is pending. If a stronger non-contingent offer comes in, these sellers give you a bump notice, typically 24 to 72 hours, to either remove your contingency, meaning you're now on the hook to close no matter what, or step aside and let the new buyer take it. The upside, well, there's no bridge loans, no carrying two mortgages, low financial risk. Downside, you would lose the house you want if you can't move fast enough. Say you get bumped on a Tuesday with a 48-hour notice. Your own home hasn't gone under contract yet. You either remove the contingency and hope your sale closes in time, or you lose the house. There's no in between. And that's why getting your current home priced right from day one matters just as much as the offer you write on the new one. This works best if you have a strong equity, a realistic list price on your current home, and the bandwidth to move quickly if you get bumped. Option two is bridge financing. A bridge loan lets you borrow against the current equity in your home, typically up to about 80% of its value, to cover the down payment and closing costs on your new home before the old one sells. That means you can write a clean, non-contingent offer, which is a lot more competitive in this market. But bridge loans aren't cheap. You're typically looking at 8 to 12% plus 1 to 3% in origination fees and another 2 to 5% in your own closing costs. With the average 30-year rate sitting around 6.7% right now, a bridge loan is a premium tool. It's not free money, it's a short-term bridge you paid across. Let's put that into dollars. On a $300,000 bridge loan, you could be looking at $24,000 to $36,000 in interest over just a few months, plus another $9,000 to $24,000 in fees. That's real money, even if it's temporary. This makes the most sense if you have significant equity in your current home and is realistically going to sell fast, and the extra cost is worth it to guarantee you land the house you actually want. Option three, and honestly, the one I think is the most underused by move-up buyers, is the seller leaseback, flipped in your favor. Here's how it works. You sell your current home at first, which makes you cash non-contingent buyer on your next purchase, the strongest possible in this market. But instead of scrambling into temporary housing, you negotiate a short-term leaseback with your buyers using the short-term leaseback addendum. You pay them rent, you put down a security deposit, and that's separate from that rent, and you stay in the home for an agreed period upon time, often just a few weeks, while you close on your next place. It's a strategy real estate investors have been using for years, and it works just as well for a move-up family. Compare that to a bridge loan's tens of thousands of dollars in interest and fees, and a leaseback often costs you next to nothing beyond the rent you'd be paying somewhere else anyways. It just keeps you in your own home while you wait. The key is negotiating that leaseback in to your listing strategy from day one, not scrambling to add it after you've already accepted an offer. So which one's the right one for you? If you have a low risk tolerance and solid equity, the contingent offer with a kick-out clause keeps things simple. If you have strong equity and speed matters more than cost, bridge financing gets you a clean offer today. And if you want the strongest possible offer with the least financial risk, selling first with a negotiated leaseback is usually my first recommendation, especially here in Sandy, where homes are moving quickly and buyers with financing contingencies are getting outbid regularly. One nuance worth knowing, condos in this market are actually more buyer-friendly right now, with pricing holding flatter and more room to negotiate. So if you're moving from a single-family home into a condo, you may have a little bit more leverage than these numbers suggest. The right answers come down to your specific equity position, your risk tolerance, and how competitive the neighborhood that you're targeting actually is. This isn't a one-size-fits-all decision, and it's not something you should figure out from a YouTube video alone. It needs to be run against your actual numbers. So if you're thinking about moving up and buying, text MOVE UP to 385-218-1714, and let's build a specific game plan together. If this is your first time here, welcome. I post practical, data-driven real estate strategy for Sandy buyers and sellers every week. Hit the subscribe button and don't miss out on the rest of the series, and I'll see you in the next video.